Hello and welcome to another 5 with Fitz. I can't believe how well this is working, and I really appreciate all the support from everybody. I had a lot of fear, a lot of trepidation. I didn't know if doing a video version of the 5 with Fitz was going to play well, but you asked for it, and the feedback I continue to get from everybody is that it's really helpful and appreciated. So, long story short, I appreciate you and appreciate all the commentary you've given me. Thank you. Let's get to the markets. I love what I do because, this kind of stuff is so much fun. It's like putting a puzzle together every single day. Today is a great example of what I was talking about or am talking about. You and I both knew what would happen here today. Why? Because we've seen this playbook so many times that we've memorized the lines. The markets move higher, and when they get high enough that the go fast crowd has some gains on the table, out come the doomsayers and the cautionary headlines about a deteriorating economy or something nasty about tariffs or some other fear-inducing sensationalist-driven headline. That, in turn, of course, causes a brief sell-off that scares out the weak money at the worst possible moment. And at that point, the big traders buy in and promptly take prices higher with all that fresh money in their pockets. Now, case in point, as I record this, all three indices are now in the green again as I type because exactly what I've just described happened again this morning. By the way, it wouldn't be unusual to see another test by day's end. And I say that because I don't think the FOMO crowd is done yet. My guts tell me there's still some more money on the table, which means one or two more whipsaws, and then they'll get back to business. Now, you could almost say that the markets are being manipulated by big traders and news stories intended to provoke specific trading actions. But, oh wait, did I just say that? Anyway, seriously, people think the markets are all about numbers, analysis, and cold hard facts, and once upon a time they were. But these days, and in reality, they're as much about psychology as anything else. Think about who stands to gain when the markets reach new highs or new lows, and position your money accordingly, because I can all but guarantee you that you won't be the only one. It is always better to do what Wall Street does, not what it says. Now, here's my playbook. Number one, CNBC, why I hope that even more analysts bash Apple. And yep, there's a reason that I am always buying, something that the super savvy Kelly Evans joshed me about yesterday on CNBC. Here's the thing. The world's smartest investors are almost always buying, but not just any old stocks. No, they very carefully pick stocks, just like we do, that match up to their worldview. Then they tend to stick with them for long periods of time. Think Warren Buffett, the late Sir John Templeton, Ron Barron, Abigail Johnson, and even Melody Hobson, amongst others. I am very happy to do the same thing and encourage you to do that as well, using the right tactics, of course. Now, you can watch that video, by the way, elsewhere on the channel. Key's investing tip in this arena is that if you don't know what you're buying and why, you will probably be left crying, or worse, lurching from stock to stock based on which way the winds blow. And that's a terrible position to be in as an investor. Now, speaking of which, it was a busy day around here yesterday, so I showed up a few hours later in the day with my friend and colleague, the Venerable Scott Shellady, aka the Cow Guy on RFD TV, for a discussion about where the markets may go next and why I expect China to play hardball, unlike most folks who wrongly expected Beijing to roll over when it came to trade. Now, you can watch that video elsewhere on the channel as well. I hope you enjoy the discussion because it's valuable, it's logical, it's calm, it's rational, and, it's always a chance to learn something, myself included. Discussion's great that way. So here's the thing. My POV in this situation is that many well-meaning investors fail because they lack a rock-solid plan and longer-term perspective, which means they're blinded by short-term noise or simply paralyzed by fear. Now, I will, as always, be here if you'd like some help. If you got that covered, totally cool. Most investors don't. Number 3, this was great. July rate cut whispers. Finally. I could only shake my head this morning and grin. What do you know? The CPI just dropped a gift wrap surprise on Wall Street. May CPI came in lighter than expected. I mean, who expects these things? That's a whole different story. But, is it 0.1% month over month versus 0.2 expected, or 2.3% year over year versus 2.5%? I mean, blah, blah, blah. We're talking about Christmas, statistics from the government that are more cooked than a Christmas goose. But, so what? Core inflation also cool. Translation? What you really want to think about is that the rate cut runway just got a fresh layer of asphalt. The odds of a September cut are now clocking in at 65% or so, and there are whispers of a July surprise. I mean, frankly, I'm surprised it took this long. Then again, we are talking about government stats and JPOW. I mean, yeah, I know, mind blower. It makes my brain explode. Anyway, trade idea here, it doesn't matter whether you're a trader and or an investor. Use any temporary weakness, market softness to nibble into stuff like QQQ if you want some concentrated tech exposure. I can also envision both real estate and utilities catching a bid, XLRE, XLU. But my preference, and the one I'd encourage you to think about, better yet, buy specific stocks that can do a lot better than ETFs. Why? Because ETFs are good if you've got no alternative, but they're like buying cable television. You got to buy the 200 channels to get the 3 you actually want to watch. Let the markets come to you, though, regardless of what path you take. Why? Because the last thing you want to do is find out the hard way that you're a speculator when you thought you were an investor. Number 4, this is a biggie. NVIDIA's charm offensive is now going global. Now, CEO Jensen Huang, Uncle Jensen, has just unveiled a sweeping set of partnerships across Europe aimed at cementing NVIDIA's role not just as a chip maker, but, get this, as the backbone of sovereign AI infrastructure. A term, by the way, that I may have coined accidentally on stage in 2021 at the Money Show. Now, we'll go over that later. But anyway, the point is the narrative's coming to us. So, hoo-yah! It's a smart move, and one that likely keeps NVIDIA on the leaderboard for a long time. From France to Germany, the UK to Italy, the company is embedding its GPUs into everything from industrial cloud platforms to government-backed research hubs. Now, contrary to what most people think, though, what's happening isn't about selling more GPUs. It's about long-term geopolitical entrenchment. I mean, this is a super smart, super sophisticated strategy. Why do I say that? Because Europe has woken up to the risks of relying on US-based cloud platforms, and NVIDIA is seizing the moment to become the default AI structure partner across the continent. That's the whole sovereign AI thingy we've been talking about for the last couple of days, and in fact since 2021, 22, and 23. So the narrative, once again, is coming to us. The other thing to think about is that NVIDIA's strategy also offsets revenue lost to US-China export controls while tightening NVIDIA's grip on global AI stack. Now, China, of course, will likely procure, euphemistically, acquire new AI chips it can no longer buy here via Europe, but that's a story for another time. You do know what to do, I hope. And in case you missed it, by the way, Uncle Jensen said that quantum computing is reaching an inflection point. This is big, and I hope you've got at least one quantum choice in your portfolio like the OBA family does. The way I see things, quantum's ChatGPT moment is closer at hand than ever before. My choice is already best in class and handily beating the S&P 500 since I reintroduced it to the OBA family. Now, obviously, there are no guarantees that'll continue to charge higher, but my view and my research makes it think that it likely will. So make sure you've got some exposure there. If it's the same company that I recommend to the OBA family, fabulous. If it's a different company, it's something you choose, even a handful of them. Just get some exposure, please. Number 5. This one really is interesting to me, and I'll tell you why here in a minute, but Meta has now hired the guy that's beating them at their own game. How telling is this? Apparently, tired of watching OpenAI, Google, and Microsoft eat his lunch, Mark Zuckerberg is now hiring the guy who fed him. Meta is reportedly bringing on Scale AI founder Alexander Wang, yep, the same guy who trained the models for everybody else, who's currently beating Zuck at his own game and cutting a $14 billion check to make that happen. Now, the move is way off brand for Zuck because he usually surrounds himself with loyalists and lockstep thinkers. So what gives? Well, I suspect 2 things are going on. A, Meta knows that it's behind, and B, Zucko is desperate enough to pay top dollar for the dude who's kicking his asteroids by helping everybody else sprint past Meta and leave him in the dust. Now, this makes a lot of sense when you think about it, right? Zuck is not stupid. Moreover, he positively hates being relegated to the back seat instead of the driver's seat. Now, should you buy Meta? That's a tough call. A lot of folks love Meta, and fair enough, it's returned 40.46% in the past year. But funny enough, many of those same folks often turn up their noses at so-called sin stocks like booze, fast food, firearms, defense, or even lately AI. I say to each their own. I'm just as happy you own it if you do as I am that I don't. Well done, by the way, if you do. Today's bottom line, the headlines are almost always filled with reasons not to invest, yet history shows it's almost always a great time to do so. Take a look at the image I've got in the written version of the 5 with Fitz if you doubt me or you don't process what I'm saying here. This is important. Anyway, you got this. I promise. As always, let's make it a fabulous day, and I will see you tomorrow. Thanks for watching.